Trump. Meanwhile, in Ohio, Donald Trump is waiting, as well as most of the nation, to hear from the Federal Reserve, although he says that the Federal Reserve is way too political. And my next guest agrees. And if the Fed opts, as most expect, not to raise interest rates when Scott Martin says it should, Mr. Trump is proven right. It is a political beast. Scott, you are firmly convinced that this is just a political institution, aren't you?
I am, Neil, and the Fed chairwoman is obviously appointed by the president, so that's something to keep in mind. But the Fed has a chance to prove it today. They have a chance to hike rates in front of what's going to be one of the most controversial and most watched elections in probably our country's history, to hike rates ahead of an election and hike rates into what has been a strengthening but, say, meandering economy at times, yes, but also one that has already moved off of zero. Remember back in December, Neil, they did hike rates off of zero and promised more interest rate hikes in 2016. The economy has not changed that much since last year, but they've been so reluctant to hike for fear of helping Donald Trump and hurting Hillary Clinton.
Well, you could make an argument, too, whatever your political views, that they're just concerned about rattling the markets, period. Now, that is probably an even worse reason, because you're doing the market's bidding here. But it certainly wouldn't be the first Federal Reserve Open Market Committee to heed the market's wishes, right?
No, that's true, and I would argue that maybe really caught fire with Ben Bernanke, who was the previous chairman to Janet Yellen. And I agree with your point. You know, that's a funny notion, Neil, because should the Fed really be concerned about the stock market? They say they aren't, but Janet Yellen in past conferences has talked about reaction in small caps or reaction in biotech, and things that really the Fed does not have in their mandate, right? I mean, they talk about
I agree with you, and then we get so concerned.
Employment.
But it's not only the Fed. I mean, remember Congress with TARP in the early days, or the waning days of the Bush administration. They failed Congress to pass TARP, this rescue fund, and the markets tank almost 1,000 points. So they get back together, re-vote on it, approve it, and the market still falls over the course of the next few months, an additional 6,000 points. So why do we play this game?
It's a tough game to really figure out why they are playing, and I agree with you, because in reality, we want growth. We want normal policies. We want markets to operate as they should on their own, not with all this government stimulus and Fed intervention that I mean, look at Japan, Neil. Look what happened with Japan overnight, the crazy stimulus that's going on there, where I think they've lost complete control of the children in the play yard there, and the markets there have shown them that they've been wrong. They've shown they're doing the wrong thing, but they keep pushing the button.
A government-dictated rate on a 10-year bond, the equivalent in Japan. That's goofy. That's pretty goofy.
And don't forget, in Europe and Japan, they're buying corporate debt, too. So they're not only buying government debt, they're buying debt of corporations now to say, hey, just go out and lend, create all that debt. That's going to stimulate the economy. I don't buy it.
All right. Next time, state your mind. I don't know where you're coming from. Scott Martin, thank you very much, my friend.
I'll try better. See ya.
Try better. All right.